Hi, everybody. JC Peretz here, founder of Trend Labs, and we are here on Stock Market TV, about to have one of my favorite conversations. I am joined by Mr. Herb Greenberg. Herb, say hi to the folks.
Hello, everybody. Hello, everybody.
Let me tell you something, guys. You are in for quite the treat. Somebody like Herb Greenberg brings such a crazy amount of value to the table, particularly for someone like myself, because the way that he approaches the market, the way that he thinks about things is so different than how I approach the market, and is so complementary to so many of the other things we're talking about here, that he is such a huge value add. I'm going to say one more thing, Herb, not to make your head any bigger. We're going to say one more thing. I have wanted this for so long, a steady flow of ideas to get a name on our radar that maybe I should be shorting, maybe I should be avoiding, but there's something interesting happening in this company, usually something negative, that I would completely miss because this is not how I look at the market. So without further ado, ladies and gentlemen, Mr. Herb Greenberg, how are you, sir?
I am fine. I just do want to let you know, technicality, I am hearing a delay of all this in my ears, which makes it so hard. And I know you just said some fantastic things about me, but unfortunately, I'm hearing it a second time. So I just tell you that technologically, I'm having a problem. Oh, I see what it is. It is my bad. It is my bad. It is my bad. Hi, everybody. I'm here. This is the
First
first
timer, ladies and gentlemen. Herb Greenberg, you've never been on TV before,
never
right?
been on TV. I'm so nervous. I'm so nervous.
Never been on TV before.
But you know, it's interesting. What just happened? I just want to let everybody know what just happened. It's very interesting. I happen to have the YouTube channel of this open because I want to be able to see comments if they come in. And because this is the first time I've done this with a YouTube, even though I've done television for a few decades, it's the first time I had this issue, and I realized, aha, it's my bad. I have to have that YouTube video on pause.
Here's the thing with technology, Herb. It's usually human error. Like, usually we're like,
always.
oh, this damn thing doesn't work. It's usually us that's the problem. You see,
always us. It is always human error. We know that. Anyway, listen, it's great to be here. So what's up? Why am I here?
So I want you to tell the folks, guys, listen to what Herb is saying here. If you can explain to the folks how it is that you approach markets and how you think about things and what it is that you're trying to accomplish, because me saying it adds so much value to me and what I do, I just get the end. I just get, hey, JC, this stock, red flag, we should really watch out for this because of blah, 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 blah. And I get the end game. Can you tell the audience and me for that matter, can you walk us through kind of like, give us the elevator speech. What are you doing?
Look, what I basically am doing is I'm trying to point out risk in companies, the underlying fundamental risk. And I know it's different than a lot of people who say might be watching stock market TV are looking at the markets. But though I've been doing this long enough to know, there are many people who look at this the way, say, you do, JC. You're just looking at the symbol. That's what you like. And there are other people who are looking at this symbol, but are actually, sort of creating they're looking at the odds. They're kind of using the fundamentals as a backstop so they know what their odds are. And there are people who use a hybrid approach, who use a charts only technicals approach. And I'm kind of like agnostic in what they do, other than I'm trying to point out there is risk here. This is something I've been doing for a very long period of time. And in moments like this, when stocks are being squeezed higher, that's when some people who haven't been around will think they're geniuses because they got in on the squeeze without understanding there's another side to that. And what goes up often once the short sellers are out, if indeed the company doesn't have strong underlying fundamentals, may very well then, as I like to say, fall in an elevator shaft. And so I'm there to remind you why that might happen and what the risk is. That is what I'm looking at. I take it very seriously. I understand there are so many elements and so many different ways people approach investing, but I do know the one thing, in fact, I wrote about it in something I wrote today, fundamentals still matter. So you guys can have your good time, but just remember, these are businesses. Some of them will evolve into wonderful companies, and some of them will, be here today and gone tomorrow.
And then here's the beauty of America, Herb. America's a great place for many reasons, one of which is the ability to sell shares short and take advantage of a fall and demise of a company. You know, I used to feel bad about this sort of thing, particularly, you know, when we were shorting banks during the great financial crisis, where, you know, we were literally profiting from the demise of, you know, historic American institutions. And I used to take it harder. And then eventually I was like, listen, these companies are going to go to zero whether I'm short or not. It's not my fault that they made bad decisions. Like, sure, people are going to get lose their jobs and shareholders are going to get wiped out. Yeah, that's going to happen whether I'm short or not. So I might as well take advantage of the situation if I can, you know, if I have a say in the matter, right? And that's, to me, that's the beauty of it.
That is what makes markets. And when you only have one side of the market, people say, I hate those short sellers. Well, guess what? The short sellers are there for a reason. Partially, they're there to warn you, but on the other hand, hey, the way the world works today, the way the market structure is, there have always been short squeezes. There have always been, you know, overcrowded names that get squeezed up, but I've seen that happen time and time again, and many times it's a short-term phenomenon. And that's where you and your technicals come in, but that's also where me and my fundamentals come in. And then the beauty of it, if you're doing it right, is to really try to understand that risk as you're playing those technicals. At least that's the way I view it. And so that is a market, though. So when you think get rid of those short sellers, be careful, because there is no natural buyer when the stock is falling to cushion that blow. And I know that I've seen you, JC, talk about it just the other way, that, you know, hey, wonderful, all those people who are short the stock, they're going to have to buy on the way up. And so there are different ways of looking at this. I've been around long enough to appreciate all sides of it. I just think the fundamentals matter. I'll constantly keep coming back to that.
Yeah, I mean, listen, no question. Short sellers are really important because in America, you are incentivized to profit, like you actually make profits by discovering these frauds and you know, inefficiencies in companies and, you know, mistakes that perhaps regulators are not as incentivized to discover. Number one. Number two, I would argue that you have a larger percentage of intelligence across the market discovering these situations than you perhaps have, you know, in a regulatory body, right? So these short sellers often act as a watchdog.
Regulators are not going to be the ones who are going to sort of pull that piece out of the Jenga puzzle. They're going to wait for someone else to do it, come in and say, oh, what did you do wrong here? And I want to point out one other thing here. We talk a lot about short sellers. This is not about shorting stocks. I'm not about shorting stocks.
I am.
I'm about pointing out the risk. And so I'm just there because I will always say, and you'll hear me say it time and time again until you're sick of hearing it, and you'll say, get off your soapbox, Herb. It's very simple. Thousands of stocks to own out there. When you have thousands of stocks to own, some are going to be better than others. There are the kind you rent, and they're the kind people want to own. And you got to figure out where you are in the mix as somebody who's doing this. I tend to play to some people, to the people who want to own. You tend to pay to people who want to rent. Therein lies the beauty of this whole thing.
I always say that 99% of arguments on Twitter would end immediately if both parties just admitted they had different time horizons. And I would argue objectives too. You know, but again, I appreciate that you're coming in with the red flags, but selfishly, as somebody who's really just trying to make money from the whole casino, you know, I tend to look at markets from an unbiased perspective, and I try my best to keep an open mind by design. Obviously, as I look at individual stocks, I think about them within the context of what's happening in the global macro landscape, but still try to be as neutral and unbiased as possible, right? With you, it's very different, because with you, I have a name and I'm going to go in there with a bearish bias. Sorry, right? You know what I mean? Like, this is the only time where I'm going in specifically looking for shorting opportunities in these names. And that adds so much value to my process, Herb. It really, really does.
But you also have to admit, you also are looking at my names for names that you can get into and profit, because those stocks you think either the information I'm presenting is incorrect. And by the way, sometimes I get it wrong. You're thinking the information is incorrect, or you're thinking and you're looking at an opportunity to take those names and have an opportunity on the upside with them, which, by the way, I find maddening as hell, being on the side of trying to just point out the risk. But again, I've been around a long time. I understand it, and I appreciate all players in this market.
Well, there's three things going on. Number one, you could come up with an idea. You could be right, and you could just be early, right? You're not. You're the first to say this is not a timing mechanism. You were pointing out the risk, so perhaps you could be early. Number one. Number two, you could be late. It could have already happened, right? Also, the situation, or perhaps you're right on time and the market hasn't started to agree just yet, and maybe it's about to, right? It could be anything under the sun. Now, that's where I come in, and I'm like, oh, Herb's dead right, but everybody already knows it's already priced in. This thing's going to get squeezed. Or, you know, in other words, what I might think could happen. Or, hey, wow, this thing's absolutely ripping. Nobody's short this thing. If Herb's right, this thing's going to get clobbered. If it does this, we'll short it and we'll get in, right? Like,
and then we get the ones that are really challenging, where you have a situation where the stock has already been clobbered.
Yeah.
But it's like, you know, we've talked in the past about, say, an iRobot. You could have looked at iRobot all the way down and said, it's already happened until it went to zero. So you have these variants on this because there is no right or wrong way, and there is no one rule. Each situation is very different. And you just use pattern recognition for what might be, hoping you don't fall into that other trap that you fell into before, knowing that you very well could again.
All right. So Herb, guys, if you're listening, this is how the sausage is made. This is how Herb is thinking about things. Think about this. We were just eating our vegetables, right? You know, we were just doing the right thing, talking process, talking theory, talking philosophy, right? Now let's get to the ribeye. Let's get to the steak, right? This is the main course. We're here to make money in the market, Herb. Talk to me. Where are the risks? What are you seeing out there that should be on the radar?
Okay, well, one company I've paid a lot of attention to recently is MP Materials.
Want to put the chart up there, Gene?
Yeah. You take a look at MP Materials. This is a rare earth company. Its claim to fame, it came public via a SPAC back in 2020. And it was right about the time people were starting to talk about rare earths, and suddenly they were coming in. And rare earths are these minerals that are in the earth, and they're not really rare. But this used to be a company called Molycorp years ago. Molycorp ended up filing for bankruptcy, and then it was reconstituted after current management came in, bought this mine in California called Mountain Pass for a song, like $20 million. And this is a mine it's like central eastern, just almost on the Nevada line from in California, San Bernardino County. And so this thing has been operating for years and years and years under private ownership of others for a long time. It's been mined. But now we have this new story. And we have this story, you know, that's been evolving because of EVs, right? Originally, it was the EV story that you needed rare earths for EVs, which you do. You need rare earths that are used in magnets to make EVs and for batteries, right? For batteries, all sorts of stuff. So the company tried to capitalize on that. Now, fast forward to just recently, why I suddenly dove into a company that I have avoided. Literally, people have talked to me about this company since before it went public. I didn't want to have anything to do with it because I really don't want to dive into geology. It was not one of my favorite subjects in school. And so I ended up becoming a mini geologist in very recent times, spending an enormous amount of compressed time on this, because the company now, if you've seen what's been going on lately, China has banned shipments of rare earths into this country. That's created this big, you know, Donald Trump has been saying, he hasn't said it quite this way, but it's make rare earths great again. You know, we need to be self-reliant, all that kind of stuff. Do this for the national good. We have to be able to be self-sufficient in rare earths. And I'm sitting here after starting to do the work. Obviously, I'm talking to other folks who are involved in this one way or the other. But I'm going in and I'm spending my time trying to understand, what is this all about? And I realize this is nonsense. Because this country will never, at least not in my lifetime, and I hope to live at least another 20 years, in my lifetime, I do not believe this country will ever be fully self-reliant on its own rare earths for various uses, whatever they're going to be. Because, by the way, they've been used for years in old cathode tube TVs to refrigerators to whatever. These things have been elements that have been important in the manufacturing of many things for many, many, many years. But now we have the sexy part of the story. So you end up, before we get to this next chart, just hang on a second. This company now is suddenly in the news. What I have come to the conclusion after researching this industry is that if there was ever an argument for non-protectionism on trade, that things need to be sort of a worldwide exchange, it is rare earths, because the number of rare earths that are available, and China controls a big part of it, make this a really interesting story. So what happens is MP Materials comes out, they've been mining for years. The growth part of their story, has to do with actually building their own magnets, manufacturing their own magnets that are going to be used in EV motors. Okay, that's a new story. They haven't even really started this yet. They've been in test. They have a deal with General Motors, their first big customer. They haven't given you any details about this, but to make these magnets, you need two rare earths, dysprosium and terbium, DYTB, way too much. Who cares about it? There they are on the table of periodic elements, sitting right there.
Is the periodic table getting longer? Is it longer than when I was a kid, Herb?
I have no idea. I think you and I both weren't paying attention, so to us it's all new. So here's the reality of it. Those two elements, the company barely has any of those, hasn't processed them. They don't tell you how much they really have in their own mind. The fact is, they do need to access those from other countries and other sources. China right now is the controlling factor in that market, and they can't do that on their own. And right now, they can't get them from China. They can get them from other places. There are other parts of the world that will be mining those two very important minerals, but that part of the story remains to be seen how it goes. And you can see this is a chart from the old Molycorp. Molycorp used to actually tell you how much dysprosium was in the ground. You can see it was almost nothing in their minds of all of the stuff they own. And when you get into this, here's what I came away with. Look, this is a complicated story. And when I started doing my work on it, trying to understand the difference between, neodymium and praseodymium, however you pronounce it, and then dysprosium and terbium and the whole bit, I realized a lot of the people buying the stock and buying into the story, they're retail investors, kind of people who gravitate to a good story. This is a good story stock with a manana component to it, a far manana component. But what I can guarantee you is the average retail investor in the stock has not done the work on it, because if they have, they'll know the amount of time it takes to understand what this company mines, what goes into the mining, what goes into the processing. Just understanding it takes an enormous amount of time. It's not a simple story that you can just say, this is what they make. We understand that. It's not intuitive unless you really were paying attention in science class. And so I think it's actually a story that can be told because it has a nice ring to it. But when you get beneath the surface, you say, how is this company going to make money? When will they make money? When will they genuinely be able to show the fruits of their efforts? And the beauty of these stories for some people, certainly for Chartis, is that when you're not really generating anything fundamentally, you don't really have much in the way of profits, until you start really making money, you can say anything. And people want to come on and believe the irrational extrapolation of a story. They'll do it until the company has to deliver on the results. And then there are a whole set of other elements. So I say MP Materials, I added it to my red flag alerts focus list last week or 2 weeks ago, because I believe there's much more to the story here than meets the eye, or than most investors truly understand. Management has been ambitiously selling. Management of the company, the CEO is the largest shareholder. He's been drawing down his holdings, still owns a ton. The second largest shareholder in the company is their biggest customer in China, who they are no longer selling to, and which represents this quarter probably would represent around 60% of sales, not selling to them anymore. And even if all that gets resolved, you have so many other elements to the story. So I could go on and on about this, but I just want you to know it's a really good story from both perspectives. But I think what I'm pointing out is there's huge fundamental risk here that, if people ever care about it, will be seen in this chart that you're showing.
Well, I love that, because now I approach this, and while normally, let's say I didn't know who you were, and I would look at this more from a long position, maybe looking to be long above 20. Herb makes fun of our anchored VWAP, but really all it means, Herb, you see that sexy blue line that's there from the highs? All that means is mathematically, are the buyers making money or are the sellers making money since that point in time? That's all it means. So if we're above that level, then that means that the average buyer is actually profitable from a volume weighted perspective. So right now, technically, the average buyer since the all-time highs is actually profitable on the transaction, which is characteristic of an environment where I don't want to be short, right? So in other words, if the longs are making money, I don't want to be short. However, if you are right, or I'm not saying you're right or wrong, if the market agrees with you that the price should go down based on that and then some, the price of the stock is going to be trading below 20. At that point, we're going to be below the anchored VWAP from the highs. In other words, the average participant is losing money, which is consistent with downtrends. And prices are going to be making lower lows and lower highs, which is the sheer definition of a downtrend. And those are the types of environments where I like to be short, particularly when there is a catalyst so sexy that you just described. All the things you said sound like a disaster. Sounds like this thing's a house of cards ready to come tumbling down. So hopefully if that does happen, I'm incredibly short and profiting from that.
But I can tell you right now, this is a story stock. Story stocks tend to find their way into your short squeeze list. The short interest here, I think, is pretty decent and has been rising. I haven't looked lately. So that is a risk. And again, I come back to current market structure with these kind of ideas. You don't know where the pod shops are. You don't know where the algos are. You don't know who's doing what. And those things that have nothing to do with the underlying fundamentals or the concerns for the underlying fundamentals will continue to have impact on the stock one way or the other. This becomes a battleground stock, I suspect, based on the story. And battleground stocks, just so you understand, I prefer to stay away from battleground stocks. I get in the middle of them sometime because I can't resist. I can't not touch the wet paint because the stories are so good. But I think that there's, look, I have other ideas I'm working on that are not going to ever be battleground stocks, but are very good ideas.
Well, to answer your question, Herb, the short interest right now is the highest ever. It's about 29 million shares that are short. It's about 17.8% of the shares are short. So not anything crazy.
For a reason. And it's
for good reason.
But for good reason. But again, I'm sitting here as a guy who does this, who likes to look right, knowing that between here and there, all bets are off. But I think if you own this stock, you better understand what's going on underneath the surface. And I'm not going to say, I once said, what is the risk of this stock? I'll tell you what, there are two risks of this stock right now, short term. One is headline risk, obviously, that there's a deal with China. Who knows what it is, right? The second is bluster risk. Donald Trump comes out, he puts out a tweet, specifically mentions this company. He mentioned in a tweet a penny stock last week of a company that owns a mine 10 miles from MP, an Australian company, nothing proven. And that stock went from 1 cent to 3 cents. So while it's still pennies, what's he doing mentioning that? My wheels start turning and I go, maybe there's actually some deal between MP and that mine, and then MP can buy that mine, and MP can then change the narrative that there's another mine nearby. That's what goes on in the conspiracy theories inside my head, because I say, why did Donald Trump mention this penny stock of this company in Australia that is literally, to my way of thinking, nothing more than a stock promote with no proven anything? And so you look at these things, that's how I think when I think of these stories. But again, I'm not invested in this. I'm sitting here just writing the stories, pointing out the issues, understanding there's considerable risk, and knowing that in this world, you may be talking about this as a short squeeze and stock goes straight up, but good luck with it.
I'll leave you with this, and then I know we got one more to talk about, but the short ratio is only 5, right? So it's 5 days to cover, which is not
much.
That's not much. So, which if I'm looking to get short and I see only 5 days to cover, that doesn't scare me away. If the days to cover was 20, now I'd be like, it's a little crowded there. So I don't think it's that crowded. This one in particular here was a real battleground area for me, because this was a SPAC. I'm starting to sense a certain distaste that you have for SPACs there, Mr. Herb Greenberg. A
I've had,
little
yes,
bit.
a huge distaste,
It's a
especially,
big red flag there when
yeah,
it's a
well, this is
SPAC.
especially to look, most SPACs, as we know what's happened to most SPACs after they've merged, most of them. And we also know that today, my real distaste is if a company comes public today via SPAC, be extra careful because there's no reason to use a SPAC today. But
That's
anyway,
right.
go ahead.
That's right. So this came in the SPAC heyday when everybody had a SPAC. Not gonna lie, Herb, I made two phone calls wondering if I should have a SPAC. Both of those people told me not to do it. That was a bad idea, and I said, okay, yeah, that's a dumb idea. And then sure enough, they all collapsed. But I did make two phone calls because everybody had a SPAC. I was like, how come I don't have a
Everybody,
SPAC? Everybody had a SPAC.
everybody, everybody.
Everybody. I
The
made two phone
smartest
calls,
of
Herb.
this, by the way, the smartest of the smart had SPACs, the smartest of the smartest of the smart, because nobody wanted to be left out, because it literally was, the train is leaving the station.
It was unbelievable.
Crazy.
There was a SPAC ETF of SPACs. It was a whole thing. So this one was one of those. And so there's the high in 21. So when I see a SPAC high, right, Herb? And so as somebody who's not, technically oriented, I could tell you for a fact that high post SPAC, that's a key level in the future of the market, right? So if you're below those levels, which as you know, many SPACs are, and they just kept trading down, that was an easy one. In some cases, when you're above, you can't be short if we're above those levels. But the destruction that takes place when they lose that, now we're talking. So for me, I'm long HIMS, for example. So, I like this bounce, and our target is back to those former highs. We're almost at our target, and what happens after that, who knows? But I will tell you that below those former lows, if we are below the post-SPAC highs, I mean, that's when I would really get interested. Now, with that being said, more can happen here where I would get interested in from the short side. I'm just telling you what would need to happen as of right now. But tell me about the blue chews. You don't like the blue chews.
Well, it has nothing to do with the blue chews. This is, well, actually, in theory, it does, but no one wants to really pay attention to the blue chews. In other words, the company's core business is, erectile dysfunction and baldness drugs. But the real sex to the story, the meat to the story, which you can see from October of 23, actually, if you look at it from 24 and up, was the GLP-1s, though. You go back to the GLP-1s from that January 24. It was all about them starting to sell compounded GLP-1s that became highly controversial. There were lots of lawsuits, all sorts of things going on there. But as I pointed out yesterday, the company reported earnings. Look at this chart. This is what I care about. What I care about is the red line.
I love how much you like charts, Herb. Can I just tell you how much
charts.
you like?
I actually love telling stories with charts, especially with the fundamentals, because they're just there. It's easy. Picture tells 1,000 words. I mean, this is subscribers and subscriber growth. The blue line is subscribers. The red line is subscriber growth. You can see subscriber growth is falling. And if you do the math, you can see that the underlying business away from the GLP-1s, the core business is actually also decelerating. I don't have that up here, but I think you can see there, there's a deceleration in that business. So I think you end up with an issue where this is a company with a fantastic story. It's been a retail stock for almost ever because it just sort of speaks to that crowd. The company itself speaks to retail investors. It embraces retail investors. It basically says our first questions are going to come from retail investors. The CEO went on Twitter before the last quarter, before like a quarter ago, going, I just want to say retail investors are the smartest. I saw that and I went, oh my God, they're going to have a terrible quarter. So they're going to have some bad news coming. And indeed they did when he did that. And now, anyway, so this situation is, the company reported earnings the other day. The stock pre and post market, after reporting earnings, got hit, not clobbered. Then lo and behold, the stock opens up. It spikes immediately after it opens up. You can see it there. Makes no sense other than, I suspect, a short squeeze. It wasn't for it wasn't for guidance. The stock had been down pre and post market because of guidance for the second quarter. Company gives you 5-year guidance. 5-year guidance? Are people bidding this thing up on 5-year guidance, 2030 numbers? That's absurd. That's just not, it's absurd. But that said, the algorithms will hang on whatever the algorithms are going to hang on. The technicals that you deal with, they're all going to be sliced and diced by so many other people until they're not. I would argue you've seen this. You've seen the look. We talk about we talk about elevator shafts up. I mean, elevators up, express elevators up, elevator shafts down. Just look from your first green line all the way up. Big short squeeze, right? Then all the way down. What about all those people? What were they saying? From 70 back down. Now you say, oh, it's going back to 70. Maybe it's going back up. Who knows? But just remember, some people lost a lot of money thinking they were geniuses at 70 because they thought this was going to be a $100 stock. And I guarantee you, there are people who are owning the stock because they didn't really even understand what was going on other than thinking, hey, this is the next Netflix of health. Well, let me tell you something. I wrote about Netflix, red flag Netflix years ago for a reason that was wrong. This is a company that is a highly competitive, a company in a highly competitive space. It's the only public company in the space, so people flock to it. And I look at situations and they say when there's a public company, but there are a bunch of private companies, go talk to some of those private companies, see what's going on over there. They're still doing business too. In fact, the GLP-1s, Wegovy from Novo Nordisk, that this company is now going to sell for $600, Ro and Lifecycle are going to sell it for $500. And guess what? You can buy directly from Novo Nordisk for $500. So, there are a lot of dynamics going on here right now. I see a company that people want to get behind because it's the public name in the space. They've done a good job marketing themselves, but keep looking what's going on beneath the surface. They're going to have to either grow into their numbers or they're going to have some disappointing results in the next few quarters. One or the other. Either the shorts are going to be proven terribly wrong here, not because of the stock, not because of what Steve Straza said on your show this morning when he said the CEO is one of the most brilliant CEOs. That's ridiculous. That's absurd. He's not proven to be a brilliant CEO yet not because of the stock. It's the old, just because the stock goes up doesn't mean you're a genius.
I got to tell you, it's not about being a genius, Herb, and I love you, but the CEO has one job. The CEO's job is to increase shareholder value. Period. That's it. That's all that matters. And to Straza's credit, you might be right, but to Straza's credit, has he not done an excellent job of increasing shareholder value, Herb?
Tell me, did he do a great job increasing shareholder value from 70 to 40 or 70 to 35 or 70 to 20?
It went from 10 to, it went 7x before that.
You're talking about games in the marketplace. You're talking about the ability.
That's his job, the CEO's job.
No, the CEO has nothing to do with this stock price. CEO should be creating long-term values for the stock, not pulling levers and doing games and playing games. This is not a proven concept yet. The CEO, hey, I give him credit for executing. I think execution on any business is exceedingly hard. I certainly couldn't do it, but I will tell you, he hasn't fully executed here. Let's see what happens to that subscriber growth. Let's see what happens over time as the cost of acquisition for new customers, which direction it goes. This is a work in process right now. So let's not give anybody credit here because it's too young to give them any credit. They've done some good stuff building their business. They've got to sustain it and grow it from here. The stock is not necessarily reflecting that with moves like this that are that violent and that extreme in such a compressed period of time. That's a short squeeze. It means nothing.
You got 27% of the float is short, 60 million shares are short, all-time highs
for
on
the
short interest.
For a reason.
Well,
for a reason.
Herb, come on. How much fun is this? Is this great or what? Come on.
I love it because this is the dynamic in the marketplace that needs to be out there. And I really genuinely believe that underlying fundamentals remain a very important part of this. And guys who've been doing this a long time, men and women who've been doing this a long time, sometimes mesh the two. And that's what I'm here to try help do. Just know that there's something underneath it. I don't want to hold people back if they want to trade. I just want them to understand there is risk here and there are people betting against them, and to understand who is on the other side of the trade, because there's always someone on the other side of the trade. And sometimes that person a heck of a lot smarter than you are.
Yeah, 60 million people are short. They can have it. I'll take the other side of that. Thank you very much. Herb Greenberg, ladies and gentlemen, adding so much value to my process. I'm telling you this from the bottom of my heart. I have wanted this for so long, to have a steady flow of ideas to look at from the short side. I absolutely love this, Herb Greenberg. Guys, if you're listening out there, I hope you learned something. I certainly did. We're going to keep doing this. We're going to bring Herb back. We're going to do this again. It's too much fun not to, Herb.
I'm looking forward to it, JC. Pretty soon we'll be doing a few things together, I think.
I love it. All right, guys. Adios.
Take care.